All right. We've had a great day in the markets today. Some really good movements. Let's go over everything that happened between yesterday and today, and pretty much what we are looking at for this Asian session, even going into London session and New York session as well. All right. So if you're just joining the Sharma FX Asian session, just get a little bit comfortable because we have a lot to cover today in terms of our analysis. And today basically handed us the single best lesson for this market in weeks. And that is why we don't look at headlines and simply trade based off of headlines, and we actually read in between the lines. Because today, Trump tweeting or saying that there is no talks, no conversations going on or scheduled with Iran, we already knew that. Because every single headline that we have been looking at so far, where they kept pushing for, there's going to be a deal, there's optimism, etc. All that optimism was really just between Iran and Oman. There's really nothing, the US was not even part of it. So today, basically, we had the war in the Middle East getting worse. We had actual ballistic missiles that were fired at the UAE, and a tanker got seized in the Strait of Hormuz. Oil jumped, pushing right back up bullish, which we're going to take a look at. And gold, the asset that everyone calls, quote unquote, the safe haven, and the thing that, you're supposed to run to when missiles are flying, actually went down. And it was down about 1.5% today. And we're going to take a look at why. So if you're confused about, why is gold dropping when there's a war going on, I'll explain all that to you guys in just a minute. So about down 1.8% here. And, if none of that makes sense, then that's good. Okay, that reaction of, wait, the war happened, it's reigniting, why is gold going down? That's exact retail instinct that majority of the people have in the current markets. So hopefully you guys will understand by the end of today's session how we were already pre-positioned weeks ago, and basically, looking at the moves that we're trying to catch in these upcoming sessions and how we're positioning ourselves as well for the upcoming sessions. Now let's start off with first some data points. All right, so looking at just pure price action, we're going to do the same exact thing on TradingView as well. We'll map out the levels there, but real quick to show you guys, this is the bar chart from today. And we have S&P 500 that is already down, had its worst stretch of the month so far. And very specifically, let's actually go ahead and pull up the chart here, show you guys on the daily time frame. It's had its worst day in the last 4 weeks. So first weekly candle that's really pushing back down, that's really breaking previous daily lows here and coming right back down. NASDAQ actually got hit even harder. So let's go ahead and remove all of this. Classic zone to zone trade that we have already been calling out from just a couple of weeks ago when price was pushing back up bullish off of the previous support areas. We came into the resistance, pulling right back down, ended up getting hit the hardest, but the damage was concentrated in one place, which was the chips. So semiconductors were actually down about 5.5% as a group, with Micron down about 7%, Marvel down about 8%, SanDisk down about 9%. So the best trade of the year basically got taken to the woodshed today. But if you look at the only asset that was really pushing back up, that was oil, USO. Let's go ahead and pull up that chart too. So oil is now pushing closer to that 85 area. If we see that there's going to be any sort of news of further escalations, a counterattack, any of that, this has the pure potential of flying to around 95 area, even 100 area. And Dow pretty much was saved by It's a diverse basket of energy and defense stocks as well. So if you look at even the chart, it's the least impacted one out of all the indices that we usually follow here. And it's because it's full of energy and defense names, right? It also has a lot of chip names, financial names, all that type of stuff. But the energy and defense names are really the ones that are providing the bid today. And on a day that oil is basically ripping, missiles are flying, then you see that energy and defense names actually get bought up. So that split that we're seeing here, that's our first clue that the market is not leaving the market. Or money is not leaving the market. It's just rotating within the market itself, right? It's moving out of the crowded, expensive stuff into the physical and the hard assets instead. Let's take a look at what is happening with our macro data as well as of this morning. So now, basically, why did tech bleed and why did gold fall? The answer for both of them is yields. So we saw that bonds are oversold with yields stubbornly elevated, and by the close, we have the 30-year, let's go ahead and pull that up. We've had the 30-year yields, US yields here, US government bond yields that had hit its highest level in 19 years. And it tapped right into that 5.33% area. Let's go ahead and get the full confirmation now. Into right here. So tapped right into that 5.33 area, almost 5.337, and then pulled right back down as the new candles are starting to form here. And this isn't just America. Germany has paid the most in 15 years to sell their 30-year debt today. France at 2008 highs. Japan's 10-year is sitting at a 30-year high, and the UK near 6%. Government borrowing costs are basically spiking all over the developed world at once. So that's the single biggest force in the markets right now that most retail traders probably are not even watching at the moment or completely looking over. And another layer on top of that is we've had a JP Morgan strategist calling this AI tentacle risk that is spanning across bonds and stocks. And I think that's the best way to really put it as well, because now AI is impacting stocks and the entire bond market too. AI companies are borrowing hundreds of billions to build out their data centers, and that floods the bond market with new corporate debt, and that is pushing the yields back up, and higher yields are then putting pressure on the valuations of those same exact AI stocks and companies. So the AI trade is now feeding the very yield rise that's killing it, which is basically an entire loop that we see that's going on. So we saw that right in the live markets with chips borrowing to build and yields at 19-year highs, and then chips getting crushed, basically with NASDAQ being the worst producing or worst performing index here too. So why does all of that matter specifically for gold? And that's the key lesson here, because gold pays you nothing to hold it. So when a government bond is paying you 5% and that yield is climbing every single day, the cost of holding a metal that pays basically zero also goes up. The opportunity cost of that. Even with a war raging right now, even with escalations that are going on, even with missiles that are being fired and launched and all that stuff, if bonds are paying more and more just to sit in something safe and paying, gold gets pulled down by that gravity. Today, the war was trying to push gold up, and the bond market was basically pulling it down. And in this case, the bond market won here. So that is the key area, or the key gap that most people don't tend to understand. The fact that gold has two drivers, war and yields. And when they disagree, usually in that moment, yields will be the ones that are going to win. So today was the cleanest example of that we just saw. And this morning, if anyone who basically ended up buying gold, thinking that simply this is based off of any sort of war optimism, or the fact that war got escalated and that there's going to be gold optimism, you basically got hurt in the market. But if you understood the gold answers to yields first and you stayed patient, now you had a much better price that you're looking at the moment. And we're going to go through all the technical levels here in just a little bit. So that's the reason why you want to look beyond just the headlines and actually read in between the lines and really understand the cross-asset correlations that are going on all across the market, because money is not rotating out of the market, right? It's not a clean picture as a war is going on, there's any sort of uncertainty, you flight over to the safe haven assets. Even these assets are being used very strategically at the moment too. And actually, let's talk about gold very specifically while we are already here. So let's go ahead and remove all these levels. So this is the key trade that's playing out at the moment. This is a very key opportunity as well. The biggest opportunities for us to trade. Let's go ahead into the Asian session. So it's very important to really understand, what's happening with gold and very specifically with silver too. But this is where you're going to stand out from the crowd and especially from the retail side. So we see that gold is pulling back, right? Right when Asian sessions start to open up, we had this pullback that happened. Even if you go onto the 1 hour time frame, right when the market opened up, it pushed back down bearish, and now we're starting to see a pullback up bullish here. And our analysis here was talking about how we're seeing that the sell-off is basically looking a little bit like suspicious, so to speak. And the reason for that is because while retail side was panic selling into that drop, the institutions were quietly buying it up. And even the options data, actually from this morning, let's go ahead and pull that up, shows us the same exact information too. So right now, the short-term selling on gold today is more of the hedging, the profit taking, but there's a lot more of the accumulation that is also going on. So buy the dip, medium term opportunity and sentiment that is going on at the moment too. If you're just looking at the options data, especially with gold, I've seen the same exact thing where you have short-term bearish gold pressure, again, from the profit taking and the hedging, but longer-term bullish accumulation that is going on. We have a significant call that is sitting at the November 425 call buy, which is about a 25 move, 6% increase in about 3 months that the institutions are expecting. So big money is loading up on the longer dated call on the gold upside with November and the 2027 calls, which are basically months out, right into this dip at the moment. So you want to read what that actually tells you, that the smart money is not scared of this drop at the moment. Instead, they're using it. They're buying what retail is fearfully selling at the moment because they know that this is just a temporary drop. It's a yield-driven shakeout that basically happened today, and it's not the end of the gold story. So the way that we're going to be playing it here, especially within the group, is you're not going to continue selling into gold when these are just profit-taking levels where price is pulling right back down, right? You're not chasing gold down, and you're not also catching a falling knife here, right? Instead, we want to see those clear support areas to be formed, the pullbacks, the healthy bullish structure to the upside instead of a straight shot. We don't care about that. The zone that I really care about here is going to be the 4,300 level, which is down here. I'm just using whole numbers. It's a lot easier. But 4,300, even if you come onto the weekly time frame, pretty much the bottom wick of the previous weekly candle, previous resistance here, and then just waiting for price to push back up. So around that 4,300 to around 4,340 where price is sitting at the moment. I'll create another line here. This is a zone that I'm really watching into. If price breaks below this, that's perfectly fine. I'm going to look for my scalp opportunities to the downside. I'm still going to capitalize off of that. But for my longer term trades, for my swing trades, or even setting up for a position trade, I want price to dip back down closer to the 4,300 and then continue pushing back up bullish. Now, the big catalyst for this is also going to be tomorrow's FOMC meeting minutes that are going to be coming out and the type of sentiment that they're going to be setting up here too. So what I want to see is first gold stabilizing here and holding above the 4,300, 4,340 area. And then that's where really I'm going to start to step in. If tomorrow or even going into London session, we see that gold continues to kind of stabilize or maintain above this 4,340 area, then our next big catalyst, like I talked about, is going to be the FOMC meeting minutes. And once that clears up the yield pressure, that's where really we're going to be stepping in with our scaling and our opportunity for a potential scaling opportunity or even a position trade with the institutions, targeting that move right back up to the upside. First target being into this resistance area on the 4 hour and even on the daily time frame. So that is closer to your 44, I would just say 40 area. And then if we can continue breaking past that, then the next key area that I'm really watching is going to be the 4,500 mark. For that, I'm going to create a zone just so you guys can see that on the higher time frames. Let's come back up to the weekly. That is your previous support area here on the weekly and even on the daily time frame where you had all this consolidation. So break above 44.40 is really what's going to take you up top there. But the key thing is tomorrow we would need the Fed minutes to clear the yield pressure for that move back up. My basic line in the sand is going to be below the 4,300, closer to around 4,280 area. So that way I'm giving price enough room to right around here, 4290, 4280, to create any bottom wick rejections, the fake outs, anything like that, and then a continuation back up. This is really where you start to see that the bullish structure starts to break as soon as price breaks below this area here. Other than that, it's just, let's just go ahead and pull this out. Other than that, it's just a straight bullish structure, maybe a potential little dip back down into a support area into 4,300 and then a continuation back up. If price can break below 4,300, that 4,280 area, give me a retest back into that 4,290, 4,280, and then a continuation down. Then the next target area is going to be closer to the 4,225 area. Straight sells coming right back down, bearish. But that's the next key area here, right? So you gotta also look at the fact that based off the weekly time frame, we've had a massive bullish momentum after a multi-week consolidation. So price does have to correct, right? Either it's going to consolidate or it's going to pull right back down bearish and then continue back up. It has to correct this bullish momentum in one direction or another, or one way or another. So if we lose that 4,300, then we're headed right back down. And that's going to be on hawkish minutes. And other than that, if we see a dovish sentiment going into tomorrow after the minutes, then we're going to continue buying the dip. That's the full move. We already saw it from our data points here too from TrendSpider. So basically, let it kind of breathe out a little bit. Let it hold on to a support area, even on some of these lower time frames. What I'm going to wait for, even for a potential scalp, is price to break above its own 30-minute high. I'm going to set my alert for those buys above there, or flip back down and close below this 30-minute low and have those sells coming right back down into 4,300. So let it breathe. You already have a lot of consolidation here to the left, right? So you don't want to be jumping into consolidation itself too. Now, silver is your more reactive, your higher beta version of the same exact trade as gold, and it did get hit harder today. And we have it down about 2.5%. So almost 3%, 2.5%. So sharp reversal off of yesterday's around 66 and 50 cents move to the downside. And that's what, silver does. It's a lot more reactive, it's a lot more volatile, and it moves more in both directions. And let's pull up our data points here. Okay. So with silver, we have a lot more aggressive options data that we have here. And we saw that there were aggressive longer dated call buying. The September 70 strike, the same structural story as gold. And then also, let's continue down here. The biggest opportunities right here. So March 2027, $60 calls being bought, longer term bullish. Short term is just noise. We're looking at support levels on the daily time frame. High beta trade to gold. If gold bounces, then silver is going to bounce harder. In the Asian session, you pretty much have the same exact thing. Silver right now being the most bullish and gold also being bullish on dips. So you come over to the weekly time frame. You've got your top wick rejection. 66.52. And then what I'm interested in is this level down here, which is your wick rejection to the left. So that massive wick rejection, this resistance before price pushed back up about 2 weeks ago. On the daily time frame, you have a key level right into the support area right here. And What I'm looking for is the same exact thing as gold. Can price continue holding on to the support? If not, then we have a quick little trade to the downside that we can catch below that 52, almost 50 cent area, and then a continuation right back down bearish into that 61 mark. Drop down to the 1 hour time frame. So that's your cleaner sell. And for buys, we're waiting for price to continue holding on to this support here into the zone, and then a continuation right back up bullish. So silver's trade is really just conditional. It only works if gold continues to hold. So our key catalyst here is going to be gold. I'm not setting alerts on silver here. I'm just waiting for gold to either hit one of these alerts, and then we come back to silver and look for our moves there. Now, prime time for yen. So we're going to take a look at that. Let's start off with USD JPY first. So with our yen crosses, our biggest opportunities, all three of the yen crosses that we're looking at, UJ, GJ, and EJ, are currently sitting in consolidation after sharply strengthening JPY in late July. We already talked about yen intervention. BOJ has been quietly strengthening JPY. Asian session, yeah, we already know that's prime time. So if there's any BOJ or MOF statement, that's going to create volatility. Right now, the sentiment or the bias is that JPY strength is going to continue, and basically looking at short GJ and UJ on rallies. Right now, EJ and GJ are the best trade opportunities that we have. UJ is currently sitting at a resistance level. Let's make sure there's nothing else that we have missed on the yen. Nope, looks like we're pretty solid. Cool. Now, another important thing or fundamental to watch for the yen is going to be the institutions clearly printing these reports, expecting that Bank of Japan is going to pick up the pace of interest rate hikes, with the next one coming as soon as next month. So here, Bank of Japan already a couple of months ago said that they wanted to continue to have or hike interest rates every 3 months instead of 6 months. And that's the same exact thing that this article here is saying. If you're looking at UJ very specifically, just in terms of how that's lining up from a technical perspective, right now, UJ is pinned against this almost 160 area or 159.7. We have been consolidating here for the longest time, really since August 10th. So about 8 days of just pure consolidation that's really going on right here as price is pinned against that 159.7 area. The big story that's building here is Japan Central Bank now looks to raise interest rates in September, and the market is already pricing in nearly, what was it, 80%, 78%? 78% chance of a hike when BOJ meets next month. And so that is the one that's really providing the most strength. And a rate hike is going to strengthen the yen, obviously, right? That's our structural tailwind that we're looking at. But continue looking at the tension here. There's two forces that are pulling against each other. First of all is the yen strength because of the near certain, almost, if you're pricing in 78% chance of BOJ hike, and the weak dollar over time. Same thing, continue looking at DXY as we looked at it yesterday. Coming back down, 3 months low that it's tapping into, right? So you have a weak dollar, you have the yen that's strengthening. But the yen weakness here is oil ripping because Japan imports almost all of its crude oil. So an oil spike is going to hurt the yen. So the way that you're going to basically trade this or any of the yen cross is not just UJ, but whatever UJ does, rest of the pairs are basically going to do the same thing. We are right now pinned against a very strong level. So these are levels where we have seen interventions in the past as well, right? So this is where you have the high risk once again. You have your bottom week rejection from this week. If you look to the left, you're currently sitting in that consolidation. 158.8. Drop down to the daily time frame and you have your core consolidation that's happening here. So in terms of scalping, you can look for a zone-to-zone trade. There's nothing wrong with that. But you have to be very careful as price is tapping into that 159.7, almost 160 area, given that that's where the intervention risk now comes back into the market. So up near that 160 area, I'm basically looking for short opportunities to come back down into this support area. Let's say it breaks the previous daily low, continues pushing down. You still have about 50 pips that you can catch. But if the intervention risk continues, and let's say you're part of the sells here already, you turn that 50 pips into almost 200 pips to the downside. That is a typical move that we have seen on the intervention risk, right? If there's any sort of speculation that there's an intervention, you have those nice sell opportunities. Other than that, your safest trades are just zone to zone, as long as you understand what's the limitation of your trade here. But I respect this exactly where, Japan's authorities have already stepped in before to defend the yen. So even if, we're seeing that the senator's letter is demanding that they justify their intervention, if you come back here, that's really not going to move yen too much here, right? So you're still going to keep your stops very tight. So in this case, let's say I look for a nice sell opportunity, it breaks the previous low. My stops are going to be for a 40 to 50 point move. I'm looking for about a 20 to 30 pip stop loss, right? Because I'm expecting that price is going to continue pushing back down for those wick rejections and wick fills to the downside. At the bare minimum, looking to closer to about a 100 pip move. If we can see that there's more yen strength that's coming into the market as we're getting closer to September's interest rates coming out, especially from Bank of Japan too. A surprise intervention will spike this hundreds of pips in an hour. So that you have to be very careful of, regardless of whatever stop loss is, whatever price will fly through it, right? So you have to be very, very careful here. So you're not looking for buys as price is tapping into 159 or 160 areas. The only thing that really makes sense here is sells in that zone to zone trade, exactly how price has done that in this consolidation here. Now, the flip side of that is going to be if oil gaps up overnight. Let's say if there's a counterattack from Oman, or if there's a counterattack from UAE, or if there's, attack from the US, oil will spike up. And as it spikes up or gaps up, the yen will weaken, right? And in that case, you will see that USD JPY will have these little pushes up. I'm not saying that it's going to have that entire momentum to the upside, but I do think that that quick yen weakness will still give you about 64 pips to about 100 pips to the upside. So that's the key catalyst that you have to watch out for, even if you're holding on to any of the yen crosses going into London session. Now, in terms of scalping, you drop down to the 4-hour time frame. You have this 4-hour consolidation right here. You wait for price to either break above that or below it, and you look for your scalps. I would stay out of this area. This is basically just pinned at a very strong resistance area, even off of the weekly and the daily levels. Now you come over to GBP JPY. You've got your top wick rejection. You can see right off the bat, pretty much the same exact situation as UJ, pinned at a weekly resistance. You've got your bottom wick rejection here from this week. Drop down to the daily. You've got that resistance formation trying to break the previous daily low. I'm going to create my zone here because as soon as price breaks below that daily low, you have your nice sell opportunities to the downside to come back into 215.5 for about 35 pips. 4-hour consolidation. So you set an alert below that zone and above that zone. If price breaks above, you're just catching around 50 to 60 pips to the upside. So you got 44. Looking at the resistance, around 70 pips to the upside. But right now, based off the daily time frame, we haven't even broken the previous daily lows or the highs. So we're still going to give price enough room to move or kind of find its direction before looking for an entry. Now you have Euro JPY, top wick rejection, 184.9. And then bottom wick rejection. Drop down to the daily, same exact thing, just a little bit slower compared to GJ. Drop down to the 4-hour time frame, and you have your clear support areas here. So I'm actually going to bring this up a little bit more to sit right underneath the support. If price can break below that, break this wick, then you have those sell opportunities to the downside. You have a range of about 40 pips to the downside, and then you have your buy sitting above 184.9, which we'll take a look at in just a little bit too. Any questions so far? Everything makes sense?
Makes sense.
Cool. Now let's take a look at oil, because that is the main reference point for everything that is going on at the moment. You're not really trading oil, you're just watching it. Let's continue down. So the Iran 60-day ceasefire MOU has already expired. Iran has decided to shift from defensive to fully offensive policy, threatening the Hormuz Strait. Number one binary risk event for tonight. Alright, if any escalation news drops during Asian session, you can expect oil to spike. Long oil on any Iranian escalation headline. Conversely, if ceasefire extensions hold, which they're not because it's already expired and Trump said that he's not going to continue or extend that out, then you short oil, but that's obviously not happening at the moment. So here with oil, we have US oil sitting closer to almost that 85 area. These are the key levels: 68, 80, 85. You also have 90 in between here, and then the 95 area. These are all very key levels based off of the weekly time frames. You can already see the rejections here. Drop down to the daily time frame and you start to see the rejections more clearly. So here price kind of just held out right below that 85 area. This is more the market kind of just waiting to see if there's going to be a counter response from Iran, or if there's going to be more escalations or more strikes happening. And then in that case, you can absolutely expect a gap up. I'm not even expecting a clear break above. I'm expecting a full gap up to the 90 area, 95 area. Full war is when price is sitting at 100. And so today's escalation, already very real. Quick recap. You already had 2 Iranian ballistic missiles at the UAE. The UAE cutting all ties with Iran, a tanker that's already seized in the Hormuz, 7 ship attacks this month, and the US oil reserve sitting at its lowest since 1982. Let's go ahead and just confirm that real quick. Yep. Lowest since 1982. And Trump flatly outright just said no talks, blockade stays, and that he would bomb Oman if it interferes. So this is oil basically coiling, consolidating on the 4-hour time frame, just ready for a breakout here. And the risk is to the upside, right? The range is roughly around 84 area, where you have price sitting closer to the 91, pushing right back up closer to the 90 area, 91. After that, it's a straight shot up into 90 and then the 100 mark. The binary is going to be the Hormuz closure or an Oman strike here. So that gap towards the 95 to about 100 is going to be basically war at its peak. Any fresh headlines tonight are going to move oil first, then gold, then the yen, right? So that's the main sequence that we're looking at here. So the full picture, while we're still waiting, and we have our alerts set across all boards, is that yields are the main driver or the main variable for today's move that we have seen all across the board. The 30-year sitting at a 19-year high rolled tech over and dragged gold down even on a war escalation day, right? That's the regime that we're sitting in at the moment. Like I said early in the session, this is not a clean market environment anymore, where usually with any sort of war news, geopolitical uncertainties, you would usually see that gold is the safe haven bid and you see that continuation up. Right now, yields are winning, right? And that's the main catalyst that's driving yields or gold even further down. Risk is very sensitive here, so which over time, supports safe havens here, but in the moment, the yield gravity is the main catalyst. So basically tonight, if you don't end up getting a trade, that's perfectly fine. Just stay patient, because tomorrow's FOMC meeting minutes are really going to move the markets. The markets are really going to be looking towards them for any sort of a hawkish or a dovish sentiment, which is going to push even the equities with NASDAQ and US 30 already kind of sitting in a consolidation, getting a bit of a bid from its energy and the defensive names. But NASDAQ here sitting into these daily support areas and already broke the previous weekly low. So this we're going to trade together in the New York session tomorrow. Tomorrow's Wednesday? Yeah, so we're going to be live on YouTube anyways, right when the stock exchange opens up. So we're going to be trading this live together tomorrow at 6:30 a.m. PST or 9:30 Eastern Time. So just be very patient, just wait for price to break past these levels, actually hold on to those areas on the 15-minute, 30-minute time frames, especially with gold. I want to break above the 43.50, hold on to that area of support, and then we have our nice buy opportunities to the upside that we can catch. And I want the yen at resistance for a short with the tight risk. So even with GJ, as it's starting to break below, wait for the candle closures, get a tight stop loss, get a really nice trade to the downside. Same thing with USD JPY and Euro JPY. Euro JPY is going to be a little bit slower, but GBP JPY, UJ. And then I'm also watching oil as the main catalyst or the tail that moves everything else. So the whole thing hinges on tomorrow's Fed minutes. Hawkish, and you see gold is going to flush even further. If it's dovish sentiment, then it bounces off of this dip here. Everything makes sense?
Yes.
Cool. Alright, let's wait. Oh, you're about to get a 15-minute candle closure here in about 3 minutes. Alright, we got some nice earnings coming out too. Tomorrow for Dow, it's going to be the Home Depot and the pre-market. This is more for consumer behavior. Retail is mostly watching or taking profit on gold, while institutions are loading deep calls on silver. Alright, let's pull up. This is silver, let's pull up gold, and then we will pull up USO. So this is the short-term bear structure that Sidekick was talking about. And then USO just got another massive buy order. 4 hours consolidating, and we check on daily. Last daily candle got another nice buy order, pushing right back up into the 150 area, which should line up with our $103 mark. All right. 20 seconds for this 15-minute candle closure. We get a candle closure, the next candle can give me a break and retest, or top wick and a flip back down. Those are your potential sells. If the next candle pulls right back and closes into the zone, then there's no trade because you're looking at a move like this. Silver looks like it's trying to hold on to a support here. What I want to watch is this bottom wick rejection. If price can continue breaking its own hourly high. So now we're going to set our alerts. We've got a 15-minute candle closure right below zone on gold. That means that it's not ready to push just yet. Silver, same thing, weak into the zone. And here is your top wick and price pushing back down. I'm going to give it a second. I want to see it clear these areas here. Check the volume. We have some volume. If FOMC comes out dovish tomorrow, that's also going to be a nice catalyst for NASDAQ and equities as a whole. What I'm basically trying to see is that once it broke that wick here, basically coming into the next support area, can it continue breaking its own low? So that's why I also dropped down to the 5-minute to see if there is volume. There is some volume here, but I want to see it continue breaking its own low, which tells me that the sellers are still in control. That way, even if you catch a trade somewhere here, continuation down, you still have about 32 pips to the downside that you can catch. All right. Stop loss, I'm going to keep that very tight. Let's give it 9. Let's go for a 2-to-1. So the reason why I'm keeping it up top there is because the candle did try to push back down. It did break its own low. You had a 5-minute candle closure, nice bearish. At some point, what I would like to see, ideally for a healthy bearish structure, push. This is a very strong level that we have mapped out already. Pull back closer to entry price, potentially a little bit higher, and then continue dropping. You have your 215.5 as your full move here. You're about to have an hourly candle closure here soon too. In about 8 minutes. Nothing from gold, nothing from silver, nothing from UJ here just yet, and nothing from your JPY. I'm setting this alert here. That's not for an entry alert, but that is just to see if price reverses back up for UJ. If it does, then we know that GJ is going to do the same exact thing. So UJ is pushing right now. It hasn't broken out of that consolidation, but GJ already did that. So it's kind of leading the way. So that's what I mean when I say that GJ is a bit more volatile version of UJ. It's going to do whatever UJ is doing. So if UJ is trying to push back down bearish, GJ is going to do the same exact thing. All right, we got a couple of seconds left here, just about a minute left for this 5-minute. Again, just for volume, for a continuation down. You have the final 5 minutes for a new hourly candle. You are sitting at about a move of, where's 10 pips? Going to be around here, 10 pips. So as price breaks its own low. All right, there's a new 5. So last 5 close with a nice bottom wick. You have a new 5 here, which is the final 5 minutes of the hourly candle. We're still giving it enough room to create the top wick and then continue pushing down on the next hourly candle. But if it breaks above that zone, then I basically want to be taken out very quick. My key read here is going to be as long as USD JPY is still bearish, we are still solid here. Just a few more minutes. Setting up a nice bottom wick for the next hourly candle. The current hourly does not have a top wick, so that's the reason why I want the next hourly candle to also have a top wick. Basically take out the buyers and then continue pushing back down. Alright, we got an alert hit on UJ, which means that it's starting to pull back here. A minute left. So I'm watching this to see if I will have the potential to increase my TP on GJ. If UJ closes back up above this area, next hourly can create a top wick and continue pushing down. That's going to be the best opportunity to continue increasing my TP on GJ as well. If it kind of just hangs around this area, around this support, doesn't really give me a lot of volume, then that basically is a sign for us to manage our GJ trade. It hasn't moved a lot. Like almost like 10 pips, which is not a lot, but you're basically going to get out of the trade still profitable. Manage whatever you can a day before the FOMC meeting minutes. So tomorrow's meeting minutes are really going to decide whatever ends up happening in the markets, which is 11 a.m. PST or 2 p.m. Eastern time. But our live session tomorrow is still going to be at 6:30 a.m. on YouTube, right at the market open. All right, there's your hourly candle. So nice bearish volume. UJ closed a little bit closer to the zone here, so just waiting for this candle to also create a top wick. Let's see if it can continue pushing down. As of right now, it just seems like this is the area that it's stuck in. So I'm still going to set an alert. That is not an entry alert. That is just me to continue watching whatever ends up happening. So if UJ pulls back up, then GJ is going to do the same thing. But if it doesn't, it kind of just hangs around there. Then we know that we have some opportunity with GJ here. I just want to see a top wick on the hourly and then a continuation down. I know we're on the top of the hour already, so we're going to give it just a couple more minutes. Let's check up on everything else. You've got the previous hourly candle that closed bullish, but you got the new one that rejected right into that 43.40 area that we had mapped out. It is a new hourly candle, so you still wait on it. You don't just jump in immediately. So give it the first at least 5 minutes to make sure that you don't end up becoming a wick. Alright, UJ's pushing up, so that means that I should start managing my trade. So what I'm going to do is move to break even. I'm not taking partials here. Very small trade that's running anyways. So I just move to break even. If price breaks above that, then you get taken out at the break even point. You don't incur any losses. What I am going to do is show my stop loss a little bit into the entry, so then it covers the fees and whatever for my trade. So it's truly going to be a break even. So for that, $784, which is above the current 15 high. So this is where all my fees and everything would be covered. I would be getting out with actual complete break even. With gold, you're still waiting. You're going to give it the first 5-10 minutes. Make sure it's not just a wick rejection and then pull right back up. This is your no trade zone. This is your sells. As long as candles can close, next candle can create a top wick and continue pushing. No trade here. And then as price drops back down, this is where your massive buys are sitting, as we already saw from the data points, our analysis earlier into the session, and then a continuation right back up. Cool. That's my managed trade here, and we're pretty much done for the session. I will see you guys tomorrow morning right at the stock exchange open. It will be live on YouTube, and we're going to be trading the market open together tomorrow. Have a good one, guys.